Hello friends, welcome to the first session of Financial Management, specially published for Bcom third semester. It's a compilation of very important and likely questions to appear in your upcoming exam. Request you to pay additional attention to each one of them. It's highly important. To start with, the first question is, what is financial planning? A very important question which has appeared in 2019, 2015, and 2014. Financial planning includes, it is the estimation of the amount of capital to be raised as a first point. The quantum of finance required by any business to achieve its target or profit percentage should be the main important content of the financial plan. The first one mentions the same. Going to the second point, determining the form and proportionate amount of securities. The form and proportion of various corporate securities to be issued and to raise the required amount is the second point. The third one being laying down the policies so as to administer these financial plan. That is the policies to be pursued for achieving or the execution of the above points, that is accumulation of the funds and raising the securities in order to achieve the accumulation of the funds in the form of issue of securities should be considered as an important point in financial planning. Moving forward to the second question as to what is financial leverage. Again, a very repeated question appeared in 2018, 2015, and 14. Financial leverage is defined as the ability of the firm to use the fixed financial charges to magnify the effects of changes in EBIT, that is, earning before interest and tax, in the earning per share. Friends, leverage is the term which was basically borrowed from the subject physics. In general, it means leverage, the word means gaining larger benefit by using lesser amount of the force. Now coming back to financial management, it's kind of a similar meaning. Financial leverage, as the formula says, EBIT divided by PBT, that is earning before interest and tax divided by profit before tax. So financial leverage represents the relationship between companies' earnings before interest and tax, that is more commonly known as EBIT or operating profit as well, and the earning available to equity shareholders. Moving forward to the third question as to what is wealth maximization, appeared in 2018 and 14. Wealth maximization refers to the gradual growth of the value of the assets of the firm or any business for that matter in terms of benefits that it can produce. Wealth maximization attained by the company is reflected in the market value of the shares. So the concept of wealth maximization refers to the value of the assets. Any financial action can be judged in terms of benefits it can produce over the cost of action. The wealth maximization mostly reflects the market value of the shares. In other words, it is nothing but the process of creating the wealth of an organization. In short, this maximizes the value of the shareholders. Moving forward to the fourth one, that is state four components of working capital. Very important and a very basic question that has appeared in 2018 and 14, high possibility of it being repeated. The four components of working capital. Working capital in general is defined as the excess of current assets over current liabilities and provisions. So the components of current assets and current liabilities itself forms the components of the working capital. Just to mention four of them as the question requires, the main components are cash and bank balances coming under current assets, trade receivables again forming part of current assets, inventory forming part of current assets again, and trade receivables forming part of current liabilities. All these again will form the four important components of working capital as well. Let's move on to the fifth one. That is, it is definition of financial management itself. Like the subject which we are dealing with, the definition of financial management itself has been asked many times, as it is visible. It has appeared in 2017, 16, 15, and 14. Highly repeated question. Since the question is on the definition, I just request everybody to please be specific with the words as mentioned in the definition itself to be delivered in your exam paper. As defined by Joseph and Massey, financial management is the operational activity of a business that is responsible for obtaining and effectively utilizing the funds necessary for efficient operation. The meaning of the term financial management has undergone several changes from then to now, and now it is considered as a subject which primarily deals with planning, control of financial operations to the corporate enterprises, company, organization for that matter. It basically deals with the procurement of the funds and their effective utilization. Thank you, friends. I kindly request you to click on the subscribe button and keep us motivated. Thank you.